Will the China-US trade war send the price of Bitcoin flying to the moon? Well, maybe. Let's break down the situation to try to understand how it might affect the cryptocurrency markets. By the way, before we do begin, if you are new to crypto or if you know someone who is new to cryptocurrency, then make sure to check out my free course. It is designed for beginners, but has great value for anyone in the crypto space. Just go over to thecryptolark.org. We cover everything from how to set up a ledger, how to buy Bitcoin, right on down to some common mistakes you might make. Now, the first thing to point out before we do jump into this is that this is not intended as commentary on the rights or the wrongs of the politics of either country involved in this situation, but instead is designed as an investigation into the reality of the trade war and the possible impact that it could have, of course, on the wider economy, but also for cryptocurrencies, Bitcoin in particular, as it remains the strongest and the most liquid cryptocurrency. So what is happening with this crazy trade war thing? Well, the US will impose a 25% tariff on $539 billion worth of Chinese goods, and China will be imposing tariffs selectively, mind you, on $120 billion worth of US imports. Everything from railway equipment right on down to baby pacifiers is going to be affected by this, although oil has been left out of the equation up until this point. These tariffs will put substantial burdens on businesses on both sides of the Pacific on this one, and will likely lead to a slowdown in global economic growth and will lead to lots of businesses struggling. And if it was just the US and China, then, perhaps things would be manageable globally, but the US has opened up a new front in the battle for trade versus Mexico, starting with 5% tariffs, reaching up to 25% later this year. Of course, should Mexico retaliate, then along with the already in place tariffs from China, the US economy, particularly sectors like the agriculture sector, could be hit big time by a slowdown in demand. A lot of the US-China trade war is also involved with Huawei and the fight to be the country which dominates the 5G market. This has resulted in the quite, to be frank, shocking ban of Huawei from US markets and a ban on US firms selling chips to China. Crazy times we're living in. And you have to remember that in the end, as the titans fight, it's always about who gets what and not building a better world, and the little guy always gets crushed, and the rich guys, well, they end up making more and more money. Anyway, some really big trump cards that China could pull if the trade war continues to intensify would be things like cracking down on rare earth mineral exports, although recent discoveries in Japan might lessen the effect of that. Dumping US treasuries. China has more than $1 trillion in US treasury notes, so that could be a thing. They could also try to restrict access to US companies to the Chinese market, which, to be honest, isn't really all that crazy considering that the USA just did something similar to Huawei. So all this stuff is on the table. All of that, of course, would hurt the Chinese economy, but would also hurt the US economy. And that's trade wars. Everyone's stabbing each other in the eye. It's crazy. The question, of course, is how much damage China would be willing to do to itself in order to hurt the US. All of this stuff adds up to create a dangerous time for global markets, particularly for the stock markets. In spite of seeing new IPOs like Beyond Meats doing very well, the overall sentiment of the stock markets is turning rather pessimistic, with analysts like Manasari Takada saying that the trend in US stock market sentiment is starting to resemble the pattern observed in the run-up to the Lehman crisis. That's the 2008 global financial crisis, guys. It could be that bad. And he is not alone, as other major players like Morgan Stanley echo very similar sentiments to what this guy is saying. The tough reality is that a massive recession may be looming. Any one of these factors discussed could send US and Chinese investors into the arms of Bitcoin and of gold, of course, as they look for wealth hedges at a time when both the dollar and the stock markets may be under attack. But then we must also consider the oil factor. The US sanctions on countries like Iran and Russia have been having a very tough impact on the wider economic scene globally, with key US allies like Japan being threatened with US sanctions if they do not adhere to US demands. And now that we have very shocking announcements coming out of Russia, like the head of Rosneft, which is Russia's second largest oil company, saying that he thinks oil will be traded for cryptocurrencies. That's the head of Rosneft, one of the world's biggest oil companies. That's crazy. At the same time he's saying that, the Russian central bank head is exploring launching a gold-backed cryptocurrency for international settlements. And what does Russia sell? Russia sells oil. And to see this coming to the oil markets is going to be big. We may be seeing the biggest threat ever presented to the petrodollar. And without the US dollar being used as the standard for oil markets, if we went back to a gold standard for that, man, the petrodollar is going to be in some deep doo-doo here, guys. Seriously. And the fact that Russia and China are good buddies should also be cause for concern here, because the US dollar benefits primarily from its global dominance of international markets, not necessarily from the fundamentals of the US economy. And if a bitter trade war is timed with a move away from the petrodollar by major oil producers like Russia and Iran and Venezuela, well, that could very quickly spell big trouble for the dollar, which would only add to the woes of everything that we're talking about here. And of course, we see the prices of petroleum on international markets cannot be discussed without, of course, mentioning really the wider currency wars that we see going on. The oil and all this economic stuff is just a part of it. We have to look at the much wider scope beyond the dollar, of course. We must consider the British pound, we must consider the euro, we must consider the ruble, and yes, of course, the Chinese yuan, which is a very important global currency. China is discussing altering rates of the yuan, which could really be a significant escalation in the trade war that we already see boiling over the top of the pot, essentially. Of course, with the USA and China being the two biggest economies in the world, a deepening trade war between these two behemoths, with all their tit-for-tat tariffs and fiat currencies being in trouble and stock markets potentially teetering on massive volatility, all of this stuff will not just affect China and the United States. It will affect everyone, everywhere, to different extents, of course. Of course, on the other hand, all of this might just blow over. The petrodollar might not be challenged. The Russians might give up on that idea. Nothing substantial might happen with this trade war, and the US will just keep up its standard old policy of global economic supremacy, supported by our favorite petro-backed dollar, the petrodollar. But as US militarism and financial tyranny continue to weigh heavily on global markets and on friend and foe alike, this narrative is being increasingly put into question. China is too deeply embedded in global supply chains and really in the global economy overall to simply disappear or become irrelevant. And trying to alienate the world's leading manufacturer and the leading industrial producer, that's not going to work out long term. It just won't. Especially at a time when China is busy building the cities of the future, the energy of the future. They're building the damn new Silk Road. It's crazy. As well, of course, as having the biggest financial reserves of any country in the world. They are a creditor, not a debtor nation. While America, on the other hand, its infrastructure gets a grade of D. 55 cents of every dollar of the discretionary budget is spent on the military, and around 20 cents of every dollar is spent on servicing the annual debt of the $22 trillion of debt that has been tacked up by the government. A number which some estimates say may actually overtake the military budget in the next decade. That is, of course, servicing that massive debt. And who is the biggest holder of U.S. debt? It's China. If they dump that bonds, oh boy, that's going to be trouble. Even if the U.S. wins this trade war, there are so many systemically broken parts of the U.S. economy that a massive recession or even a total collapse, it's not out of the question, guys, as scary as that may sound. Remember, the Chinese, they're playing the long game here. They're inspired by the art of war, not the art of the deal. Because comparing the U.S. economy and the Chinese economy, one of them is definitely better prepared to sit and wait out a protracted and bloody trade war compared to the other one anyway. It's just a question of when all of this might happen. I hope cooler heads will prevail, but this is where we're looking right now. Also, long-term, the winners could be in the developing countries, which see increased business as both U.S. and Chinese corporations seek out new markets, so that could play a factor here as well. Anyway, on to Bitcoin. I know you guys want to hear about it. I'm just trying to paint the picture here of why the rest of what I'm going to tell you is so gosh darn important. So as fiat currencies stand the real possibility of taking some big tumbles as this trade war deepens, money will inevitably flow into Bitcoin and into gold and into property and some other things as well, but a good significant proportion of that could be flowing into Bitcoin. And look, gold is a good store of value for many investors, but the realities of digital scarcity and of Bitcoin really being undervalued currently, as well as Bitcoin being really easy to send and of course being censorship resistant, and of course a final factor which is very important is that Bitcoin is very difficult to confiscate. Let me ask you this question. Which do you imagine easier to get on a plane with? 100 kilos of gold or 100 Bitcoin on a ledger or a paper wallet? There's your answer, guys. Now, of all these facts, this will undoubtedly drive some investors into Bitcoin as we do see this wider economic situation continue to get more and more uncertain. And what will happen when big investors all start wanting a piece of a scarce asset at the same time? The price goes up. Actually, it's very interesting to see that the price of Bitcoin went from $6,000 to $8,400 within 4 days of the trade deal talks breaking down back on May 10th. Well, that's an interesting little nugget of information for you guys. Also worth remembering is that Bitcoin trades at a premium in China on, of course, the black market there because the Chinese government has come out against it. And we already have historical proof of Bitcoin being a sought-after asset in times of financial uncertainty, like around Brexit announcements or fears around, Greece and the debt crisis that was going on there. This could be the new precedent being set. We must also consider that nearly 60% of the supply of Bitcoin has not moved in the last year, meaning that when new investors come flooding in to either, escape capital controls, or maybe they just want to hedge their wealth, what are they going to find when they get to the markets? They will find an increasingly scarce and thus increasingly expensive Bitcoin. And considering the official crackdown that we have seen on Bitcoin in China, as well as the crackdown on Forex in China, you can be quite sure that we will see Bitcoin increasingly used by China's ever-growing class of millionaires and billionaires to help their capital take flight to friendlier shores. Well, in the US, investors who might be worried about a US recession, of course, sparked by, well, most of what we've discussed here today, they could be looking for Bitcoin as an escape from the dollar, or even as just a small percentage of their portfolio as sort of a Hail Mary hedge for investors who might not know Bitcoin as well. And of course, we must take into account that, well, all of this may play into larger prices for Bitcoin, which, as a Bitcoin investor, that's great. But if we do see Bitcoin's price rise due to the trade war and economic collapse and all this kind of stuff, what's that going to mean? That means massive suffering is also happening at the same time. Millions of people are going to lose their jobs, houses are going to be foreclosed on, and, the general gnashing of teeth and pulling of hair and all that biblical sounding kind of bad stuff. But if it does play out like this, and I really hope that it does, and I hope that cooler heads will prevail, guys, I really do. But if it does, Bitcoin may be an excellent way to preserve your wealth and, of course, secure the safety of you and your family. Anyway, just my 2 Satoshis, as always, guys. You will let me know what you think about this story down below in the comment section. Thank you guys so much for watching today's video. If you did enjoy this video, leave a thumbs up on it. And if you're new around here, please subscribe to the channel to know when I put out new videos. You can also click that bell, and YouTube will give you a little notification, let you know when something new's out. Long live the blockchain, and peace out till next time.